Welcome back, pure structure traders and YouTube, for another weekly mid-market trading recap for you guys. Again, with these recaps, we want to be transparent with you guys and be able to show you guys some of the trades we've been taking on the micros, micro S&P and also micro gold for you guys, to show you how to take a small substantial amount of money and to build that up into a bigger amount, and then try to withdraw that money and then restart it every single month as you build it up to about 1500. So our goal here is to show you guys that it is doable as long as you stay consistent with trading. And you may have some downfalls, you may have some not so good trades along the way within each and every day, or within each and every week as you trade, but it's okay. The goal here is to continue to stay motivated, continue to apply yourself consistently, to apply yourself to the markets with a consistent strategy, to know exactly what you're looking for, and to build that confidence as you trade. Again, with trading, you don't need multiple strategies to attack the market with. You need to be able to be confident and understand one strategy and apply that consistently to the market, so that way you build that confidence. That confidence is built by applying yourself the same way over and over and over again. I know you guys hear me repeat this every single week. You guys see the trades that I take, some good trades, some not so good trades. You see that in the midweek and even towards the end of the week, as we apply ourselves consistently, we continue to build the account. I think we ended off with maybe one red week so far as we've been doing this month after month. But again, we want to show you guys that there is a possibility of doing this even with a small amount of money, and to build that consistently. And the reason for that is to show you don't need big amounts of money to be able to be a day trader. You need to be able to have discipline and to have patience and to understand how you as a person react to certain situations, and to be able to be willing to change that, right? When you're aware of some of the bad habits that you take on over periods of time, you want to be able to understand how to remove that, right? How to take bad habits that you've had over years and years, and how to learn to change them. And the way to do that is to find ways out of bad patterns, bad habits, and then learn to apply yourself consistently to changing that each and every day. Even if it's difficult, even if it's the most frustrating thing, the more you do it and the more you attack that problem and you try to change it, the better you become at it, right? So again, you're going to see some of the trades we took on S&P and some of the trades we took on gold. We're going to start with gold. We're going to go ahead and review the weekly recap so far, what we've seen on gold and also on S&P, and then we'll jump into some of the trades that we've taken. So with that, guys, again, if you guys do like these videos, please go ahead and smash that like button. If you're not subscribed to the channel yet, please go ahead and subscribe. Any questions you guys got, feel free to pop them in here on YouTube. We would love to get back to you guys. But let's go ahead and jump into it for you guys. So for gold, we took a couple trades. I know the last couple weeks we weren't taking any trades on gold, kind of more focusing on S&P. So we'll show you some of the trades we took. Not so great on gold, but we'll show you some of them. But for gold so far, when we take a look at the bigger picture here, for gold, we did move up substantially. We got as high as somewhere around those 1796.1s. You can see we're slightly pulling back, went into a little bit of a range, found support right about 1782.3, and then below that 1776.3 as the support that we found today. So we'll see what happens. If you have not watched the London market analysis, definitely recommended that you guys do watch those videos before you guys trade. Give some good areas or key levels you want to look out for, where you can see some buying and selling start to occur, some good areas to look to buy, and maybe some good areas to look to sell from as well. But again, for the week so far, we've seen that gold has been bullish and give us some opportunities for some buying and some opportunities for some sell-offs from resistance. So far for the week on gold, let's take a look at some of the trades that we've placed. So as we move it over here into the smaller chart, we didn't take too much trades on gold, but we're going to go over some of the trades that we did end up taking on gold. You can see started off on the 15th for gold trading here. We did have a short area right here, kind of resistance a little bit below the level that we wanted it to. We shorted 1780.6. Market came up and stopped us out 1781.4. So not a bad trade idea, but again, it wasn't necessarily at our level, somewhere around 82.3. But we kept stalling right over here at resistance. So wanted to see if we can get an opportunity, but the market ended up popping back on us and then taking us out for the short. So because of that, we saw a strong bullishness happening here in the market. We had some trade opportunities from the long, 1781.2, 1781.8, 1781.9. You can see our long opportunities there. We got into 81.7, 82.3, 83.2. Then again, we had 1780.7, and we had a nice shoot up to 1781.2. So we had some good opportunities long. You can see the market was still strongly bullish. Again, we had the short idea, but we didn't have it for too long as we got stopped out on one, and we stopped trying to take the trade from there. We saw these higher low movements coming in. You can see that the market was continuing to make those higher low movements. So let's take this off for a second. As we review this, you can see prior resistance, market coming on top of this area and starting to make pushes higher, right? Nice bullishness that happened in this market. And again, we had a short here thinking that maybe we might fall off a little bit, come back down into this area for a nice fade opportunity, but we didn't. Kept holding support right here and then popped up against us a little bit. So that's okay. That ends up happening. You're not always going to get trades right all the time. The goal here is not to try to be right. The goal here is to try to be profitable as you're trading, right? So you want to get away from trying to be right all the time and try to understand, okay, what am I trying to do in these markets? What is my trade idea? Do I have a strategy behind this idea? And if I take it and stops me out, knowing that I have some type of strategy or approach and some qualifiers behind my trade, that stop out doesn't hurt as much. Now, losing a trade is never, it's never easy to take or to swallow down. You never really want to lose trades here in trading, but it's going to happen no matter what, right? It's like any business. You're going to have days where you're profitable and you're going to have times or days where you're not so profitable, right? So you want to be able to understand that it just happens in business, and you got to be able to swallow that down, learn to shake it off and to move forward, right? So you can see one loss trade there, but nice opportunity for a couple long opportunities there as we saw the markets continuing bullish. So let's pull this back up. Take a look more. I believe we took a little bit more, but let's take a look at the other trade opportunity that we had here. Right around this 1783.6, this support here, you can see at 82.3, nice area of support, but we did take the long a little bit higher. Ideally, we should have let this market pull back into these 82.3s right off the peak here and then push up from there, but we didn't. And because of that, 83.6, we got stopped out 1782.7, which is okay. That was our fault. We should have been more patient, disciplined, let the market pull back, find that bullishness right at this level here. You're going to see a nice bullish bar that printed right at this area for a nice opportunity right off this peak of prior resistance. That would have been a great opportunity for the trade long, but again, we jumped in a little bit too early. That's where we kind of got to work on when it comes to trading. When we do trade, we want to be able to analyze our trades afterwards, see what we could do better, how we can better qualify the trades, and then look for the entry from there. So again, stopped out here. We did have another short opportunity here, 1785 even, but again, the market was bullish, so we took a little bit of more of a hit here as the market came up against us, 1788.1, which is not so good of a trade. You can see we went against it, wasn't in the area we wanted to see the market hold resistance. Should have waited somewhere up here at these 90 to 91s. That was our area of resistance, but we didn't, got impatient, and because of that, we got stopped out on that area. So again, it happens in trading, guys. What we don't want to do though is we don't want to be overexerting ourselves. You don't want to continue to try to push the trade when it's not working. Over trading is what's going to get you in big trouble. Being able to swallow a trade though, that's what's going to help you move forward, right? You want to be able to trade and continue to trade the next days. You want to live to fight another day. That means that if you take a loss, take that loss, note it down, journal it down, move forward, and look to apply yourself consistently on the next trade. Try not to try to put yourself right back into the same area over and over again, because you're just going to get killed. You see the market orders clump up in the same area, and when you see those market orders and fills that you have as you're trading clump up in the same area, that means that you're trading off of emotion now, and you're not trading your process, right? You want to stay away from trying to trade emotionally, because you're going to have bad trades no matter what. There's going to be times where you put in trades that's away from your actual strategy, and you'll see that those times are going to be times where you need to revamp, rediscipline yourself, put that patience and time in there to perform better as you trade. And if you can do that, if you can discipline yourself from staying away from trying to overtrade it, from moving your stops or anything like that, you'll find the consistency and success that you're looking for in trading. But you have to learn to become aware of those things and learn to try to stop them as much as possible. But again, so next trade opportunity was 1783.3, got a little bit higher. You can see the market kind of pushed up, gave us an opportunity here. We had a nice confirmation right in this area for a push higher, right off of those 88.3s, got into 88.7. Nice opportunity for a couple ticks off that area. Moving forward, we did have a long opportunity, 1787.9, kind of right in this mid area right here. Got it up to about 89.4. So again, beautiful opportunity. You can see the market gradually pulling down, failing to get lower as it comes right into this prior peak here, and a nice push off right there in that middle area. So good opportunity. Could have ran it up a little bit higher, but didn't get that higher. We just took our profits there as we only had one lot. And to touch on that for you guys, when you're trading smaller lots, right, you don't want to try to overdo it and try to hold on to the trade. Take your points, right? Take your 1, 2 points, maybe 3 at the most, but don't try to hold for longer positions, especially if you're trying to find consistency, success in this trading business, and you're trying to build a smaller account. You don't want to try to hold the position for longer periods of time. What you're going to end up doing is you're going to end up holding it, and you'll see it run in your direction, and you'll hold it, keep holding it, and it will come all the way back, may take you out for break even, or even take you out for a loss. So that's something that, if you're struggling with, got to work on, but you want to stay away from trying to take longer runners in the beginning, and try to take your profits right away, as if you can. Try to take that 2 to 1 or 3 to 1 if you possibly can, if that's your risk to reward management. Let's take a look if we have any more here. Moving over, I believe we have a couple more right off this area. We had a long idea, 1786.3. We got stopped out, 1785.5. Came back a little bit deeper on us. Then we took a long, 1784.3. Got up to 1784.8. As we took a little bit of profit on that opportunity. And the market was kind of moving down, so we had to get away from trying to trade this support, because the market was not at our level of support yet. We kind of took it a little bit earlier as it was a little bit higher. I think it was going to pop up, but it didn't necessarily pop up from this area. It kind of came a little bit deeper. But again, we took our profits on the second one. We got stopped out on the one right before that, which is okay. It happens, when you get stopped up. But again, you got to be able to swallow that and be able to look for your next best trade, understanding that yes, you should have a max amount of trades that you take per day. I would recommend that you have no more, especially if you're starting out, you have no more than 5 trades a day. You got to keep it to that limit. When you're doing over 5 trades, you're definitely over trading, and most likely you're going to be emotionally trading, right? You want to stay away from that. And that's why we put these videos out for you guys too, not just to show you the trades, but to help you understand that there's points in time that even the best of traders get emotional about trades, right? But being able to discipline yourself and work on those emotions and performing better each and every day, that's the goal of trading, right? You don't want to overdo this stuff. So max out your trades, maybe about 3 to 5 trades per day, and try to work on that consistency, and try to work on your approach in markets, right? Try to work on your qualifiers, your strategy, and working on those, maybe bad habits that you become aware of over a period of time. All right, so that was our last trade that we took on gold so far. Let's go ahead and move into S&P 500, see what we've done so far for the week. All right, so moving over to S&P 500, give you a little bit of a recap so far in this week. You can see that the market on the 15th kind of opened up, tried to pull down into support, came down, I believe, on the 16th to somewhere right around these 44.32s, and then you can see it spiked up from there, went as high as 44.75, and then started to pull down. And you can see so far for the midweek, we have the market trying to gradually pull down deeper. We are sitting somewhere below 43.95, with support down at 43.8225. So again, if you have not watched that market analysis for the London session, good idea to watch it. That way you get some key levels where buyers or sellers are going to try to step in before you decide to trade the markets. But again, that's what we had so far for S&P 500. Let's take a look at, so moving over here into S&P 500, some of the trades that we took really didn't do too much. We're a little bit under the weather, so we took only a couple trades here on S&P. But here on the 16th, show you guys some of the trades that we actually took. We had some long opportunities, took them a little bit higher than we wanted to. Again, we had support right around these 31 to 32s, but you can see our entries are a little bit higher than we wanted it to be. We had some entries right around these 37.25s, 35 even, 35.50. You can see the long opportunities into right about these 44.38s. So still got some good profitable trades off of this area. 44.37, 44.35, 44.37.75, long into these 38.25s, 38.75, 38 even. Then we took another long right up here, 44.50.25, and only got a couple ticks. Should have took this a little bit higher, but you can see that the market was already high coming into resistance, so really didn't trust this too much, as I didn't want to try to break through that level. But you can see the market just kind of shot up right through that. But this position was a little bit higher, so they didn't want to hold on to this one. It's better if we held on to something lower as we're trying to trade this area, but we didn't get here on the micros. S&P 500 for it, but we did get a bigger move on the regular S&P. But this was again nice opportunities, but we really want to see it actually hold bullishness and get in on a lower position. Should have got in somewhere right around these 33 to 34s would have been a better entry, but still 35, 35, 75 good ones. But anywhere above that 37 is getting a little bit higher than we wanted to. But again, we did take some nice profits out of all of them. Again, as we're trading, we want to try to better our performance in trading. So again, we look at these trades and we say, okay, where was the rotations coming down to? Could we have gotten in on better positions? And the truth is, we could have set some limits. Instead of doing buy limit orders, we could have set, or buy bid orders, we could have set some limits in the middle and gotten some positions that were better. But again, we'll try to perform better each and every day. So that's why we review our trades. And that's why we put it up in front of you guys, so you guys can see and understand what we try to do, where we take our trades, and how we try to better perform each and every day. So let's go ahead and take a look at the log so far of where we're at. Now, last week we ended off the market right around 1535 in our account for our account balance. So again, we pulled out money, started it back off at $300. So we'll show you so far what we've done so far. So again, you can see we have 1, 2, 3, 4 losing trades and the rest of them winning trades. So far you can see we had a total profit somewhere around $61.75 after commission costs, $43.13 that we come into profit so far for this midweek. Total number of trades 19, total number of winning trades 15, total number of losing trades 4. So our trade win rate 79%, trade losing rate 21%. You can see in the pie chart here on the left hand side. Again, average winning trade $7.36. Average losing trade a little bit higher, $14. Largest winning trade $15. Largest losing trade $31. So again, we can perform a little bit better, but we're still for the midweek profitable. Starting balance $300. Closing position profit loss $43.13. So our account balance right now sits at $343.13. We'll try to build it up somewhere around $450, maybe about $500 if we can by the end of this week. We'll see what happens, and then we'll move into next week. But that pretty much caps it so far for this week, this mid-market trading recap for you guys. Again, if you guys do like these videos, please go ahead and smash that like button. If you're not subscribed to the channel yet, please go ahead and subscribe. Any questions you guys got, feel free to pop them in here on YouTube. We would love to get back to you guys. But again, if you're struggling to find consistency in trading, feel free to become a Pure Structure Trading member. Take some coaching sessions, maybe a coaching program with us. Allow us to help you find consistency and success in trading. If you're struggling with confidence, pop the questions in here that you need to understand on YouTube. We'd love to get back to you guys. Again, if you're in Pure Structure Trading, struggling with anything, struggling with confidence, make it known to us. Let us know. Put your journals up there. Talk to us. Allow us to help you build the confidence or to get over whatever struggles that you're struggling with. But other than that, guys, if you guys are continuing to trade, make sure you guys trade well. You guys take care. You guys have a great night. Bye.